Good evening and welcome to the Australian Stock Market Show. My quote for tonight is from Leonardo da Vinci, who said, "All our knowledge has its origins in our perceptions. How we perceive dividends will change our knowledge of the stock market." So tonight, in our no BS approach to all things stock market, we'll talk about what is a good dividend, compare this to what is normal, and share whether dividend yields are likely to remain higher for longer. This is important if you're looking for dividend income or even a good balance between income and growth. And of course, we have some great dividend stocks to share with you tonight. This is all part of our goal to help you take another step towards creating a better financial future for yourselves and your families. Hello, I'm Janine Cox, your host for tonight, and joining me is Gillham, and we're Australia's most trusted stock market educators. Good evening.
Hello.
Did you enjoy your dinner tonight?
It's a pizza.
Well, you like pizza. When you said you were going to have pizza, I straight away thought, does that come with prunes?
Prunes. How do you get pizza? They just start with P. That's all. That's the only association they have.
Well, I pay for pizza 3 days after I eat it, so it's not something that I
normally pay for the pizza before I eat it. I'm not sure. I don't know how you do it afterwards.
By the way, something I just want to make sure that you're clear.
Yeah.
It is almost December, so next week.
Yeah.
For our show, you have to wear something green or red or both.
You know the chances of that happening?
I've already started.
But you know the chances of that happening?
Well, I've got a tie picked out for you if you haven't got one.
We've got two chances. One's not very good and the other one's no hope at all. That's pretty much. Do you know this is our last show in this studio?
I know. It's sad, isn't it?
Our trusty little studio that we've been running out of for 3 years or something like that.
Makes you think, doesn't it?
Very last
how
show.
Fast time goes.
So next week we're going to be running from a temporary studio at the Victoria College of the Arts for a couple of weeks while our new studio is getting built. So it's a bit sad, but this is a perfect time for everybody to ring into the show for our last show in our inaugural studio, so to speak, isn't it?
That's right.
So are we going to sort of crack a bottle over it and wave a goodbye or something? What are we going to do?
Well, did you bring one?
No, I'm going to demolish it on Thursday. I'm going to demolish it with pride.
Demo day.
Demo day on Thursday. So I'll be exhausted. If you want to find me on Thursday, I'll have an axe in my hand.
Jeez, I don't know. I think you're going to be dangerous with those fingers that you've got problems with already.
I've got cuts and bruises everywhere.
Yeah, I know. Fine. Join the dots.
Cool. Anyway, we'll be better get into the show, Janine, and rather than listening to my waffle. But before we do get into the first segment tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask us a question that has been on your mind, then this is your opportunity to pick up your phone and call us now. Now, the number you need to call is 03 9290 9988. That's 03 9290 9988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, we're excited to be able to chat to you. This is our last show in this studio and the last time you get to dial in and chat to Janine and I this year. So get dialing now.
While we wait for you to call, it is the 5th Tuesday in the month, and this means we take a look at a hot tip. So let's get into the charts.
Okay, so what's the hot tip, Janine?
Well, it's your hot tip. I rang you today and said, have you got your hot tip? You said no. You said, well, I'll get one for you. So it's your hot tip.
It's my hot tip when I don't have a hot tip.
It's Viva Energy.
Viva Energy. This is a really good stock, you know that.
It looks great, doesn't it?
I actually like the stock. Did you know they have a manufacturing facility, or what do you call it? Production facility in Geelong. Go Cats.
Oh, you're excited.
They do. So let's get back to the chart anyway. So here's the chart of Viva Energy.
There always has to be football in this for you, doesn't there? Somewhere you'll find it.
Well, that's fine. So Viva Energy, go Viva.
Yeah, okay. So looking at the chart, we can see that the long-term trend has been up. I mean, this just looks really nice from a trending point of view.
Looks good, doesn't it?
And it's got a reasonable amount of volatility in it as well to get some growth. But at the moment, it's been trading sideways for a number of months. So it would really need to start bursting out of the blocks to get me thinking, well, it's on its way again.
It's on the cups, isn't it?
Well, it's been in blue sky territory, right? So we've got to expect that once it's gone through these highs here, which is when it first floated on the market. And mind you, the interesting thing here is that, like we say, a lot of stocks will trade at less than their opening price, in that first year, which it did that to a T in very dramatic fashion with COVID coming in there. And then looking at what it's done since, I think that's really a nice recovery, not just due to a market recovery, but it's a very steady, gradual trend that's led it right back up there. So
just outside the top 100. Yep.
It's just outside the top 100. Yep. So, the good thing about that, when I last checked anyway, it was outside that 100. And if it does start to move higher and its position changes, then you could see a lot more fund managers interested in it once it goes through that 100, which could drive it even higher. So
earnings looking good. Dividends okay.
I mean, you've got to do your own research. The thing with any stock that we talk about on the show, make sure you do your own research. Have a look at the fundamentals. They should be supporting the reason to buy, but then if it depends what your trading strategy is on the stock, if it's more short to medium term, then it could be that the technicals are the most important thing and outweigh any fundamentals. But if you look at stocks medium to long term, then you want to really look at those, more medium term earnings in there. But it's something that the viewers can research.
It is, and it's in the energy sector, and I think it's supplying products and that sort of stuff. It's obviously because they bought Coles Express with Ampol, which used to be Caltex, wasn't it?
Yeah, so look, I mean, there were a lot of deals being done over the last couple of years, and that was
so they should start to reap some good benefits from all of that sort of stuff. So I actually like it. Well done.
Okay.
For my tip, it's really good. I like it.
Okay.
Is that it for Viva?
Yeah, I know what you'll do. If it goes well, you'll say, "Yep, it was a good one on my part."
Look, I'll take all.
But if it falls away, then you'll be saying, "Well, that was Janine's tip."
That was Janine's tip. Well, I've done pretty well on my tips, haven't I?
You have. Look, I mean, if it takes out this low here.
Yep.
In November, then we know we just got to be patient and wait.
Okay. Any more on Viva?
That's it for now. And that is it for our thoughts on the hot tip. Whether it's Dale's or mine, we'll argue that down the track. Now it's time to get into our first email for the night. And our first email is actually from Raj. Hi Dale and Janine, what's your view on the BNPL stock? Zip actually, regards Raj. Now, this is buy now, pay later, aren't we?
Correct.
Yeah. So we have talked about this on the show, I think, not that long ago.
Yeah, I've talked about it on my market wrap, or my market report on Monday a few weeks ago, because everybody's seen buy now, pay later come off a whole lot over the last sort of 6 to 12 months, and they're going, oh well, is it cheap? Is it time to buy? And I think, to me, that they've had that explosion and then they've had their implosion to some degree. And there's so much competition in this sort of space. And it really is a lot of competition because the banks are coming in, all the credit cards. So Z1P or Zip Pay, what do you reckon? I mean, the chart's looking okay, isn't it?
Well, I mean, looking at the long-term picture, it looks really concerning, doesn't it, given how far it's fallen? It does look
concerning, but it's looking a little bit better than what it was back earlier in the year or mid-year.
I mean, it'd have to go through that high there on the 18th of November to actually even look like it was starting to go up. And even then, there's always a risk it could just trade back below this low of this week. So that's just something to be mindful of. It's high risk, I think, at this point.
Oh, look to me. And people are looking at these sorts of stocks, and I've had a lot of questions on Zip and some of the other ones like Block and the other ones in this sort of space. But they're thinking they're going to do what they did back a few years ago.
So they hear someone commenting on the stock. And they think, oh, well, it's just so far below the prices it was trading at before. Maybe even looking at that 52-week, low that we've talked about before, and then thinking that it's a bargain at this point. So
I'm not excited about it.
I don't think. Look, its volume's falling as it's going sideways at the moment. Sort of, it's been a bit choppy rather, but overall the volume's been falling on the stock. So you'd really want to start to see that rise with some increased volume behind it.
I'm with you, totally with you. Now, Janine, we've got a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got there?
Hi, this is Leon in Perth.
Welcome to the show, Leon, and welcome from Perth. Fantastic to have you on. You've got a question for us?
Yes. So first of all, I enjoy your show very much. I watch it every week.
Oh, thank you.
And I feel that you mentioned about cut loss quick and let profit run, which is fantastic.
2 thumbs up.
And I would like to know what the short tips what's the best way to let profit run?
What's the best way to let profits
Has
run?
he read your book?
Have you read
It's
my
a short,
book?
short. I have your first book.
Yep.
I mean, the How to Beat the Managed Fund by 20%. But I haven't finished it. So I'm going to read it. So, yeah.
Okay, so you'll have it read by Friday, so when I ring you up and ask you questions, you'll know the answers.
Yes, but sorry about that. I'm very busy, but I will read that.
I'm always busy, but it's never too busy to read a good book. But thanks, Leon, for calling into the show. Let's go and answer the question. So how do you let a stock run?
Well, look, I mean, it's really interesting to use the example that he's brought up. So the stock, should we look at the particular stock that
He mentioned a stock. He
He
mention a
didn't,
stock.
but somebody actually gave me a bit of a heads up that there was one.
Oh, okay. So anyway.
Well, look, to let a stock run, it means it's obviously trending up, and you've got to have that trailing stop in place to be able to manage that higher. But it's not, when people who haven't traded before think about letting a stock run, they're probably thinking longer term because they're thinking from an investor's mindset.
Yeah, but that depends on what your mindset is. To me, it's like if a stock's going up, you let it keep going. If it's coming down, then that's where the issue is.
Yeah, but what does coming down mean? Because so to someone, coming down could be the last couple of weeks it's fallen. They think that's coming down.
It's finished, and then it just turns and goes up again. Because the thing is, the stocks don't go just straight up. They just don't do that. But they have. So therefore, it's having a lot of rules on it. But again, that's why we talk about.
Isn't it interesting? Because investors get told to think longer term, and yet when a stock's falling, they start to think short term all of a sudden.
They do, because they're losing profit or they're losing capital. But you've got to have, that's why you've got to have those rules around it, like your initial stop loss and trailing stop losses and exit strategies, because that allows you to let profits run. Now, we can't go into that on this show because, obviously for us to teach things, there's layers of teaching to get people to understand it.
Will we be doing some of that in Talking Wealth?
We'll be doing some of that in Talking Wealth, yeah. So there'll be a lot more stuff we'll be doing on Talking Wealth, which which allows us to do that, which YouTube just doesn't allow us to do that sort of stuff. But the thing is letting profits run is just basically having that exit strategy, so that whilst the stock's moving up and comes down, it doesn't trigger your exit strategy at least 80% of the time. And so that's probably, and whilst that's probably a very high level answer, it's whatever strategy you have, it's got to keep you in the stock at least 80% of the time when to run. If it's stopping you out or getting you out 50% of the time,
but 80% is just a sort of figure that you've plucked out of the air.
Yeah.
I mean, because it could be 70%, and what's wrong with that?
Well, if you're making a lot of money, it's not, but it could be 90%, couldn't it? Could be
true,
even better.
true.
So that's the point, is about having an exit strategy underneath the price that's far enough away to allow the stock to unfold up and down and do what it needs to do, but not too tight that you get stopped out too quickly, which is what most people do, because people fear losing their profit, so they jump out too quickly.
Yep.
And if it does come down 1 or 2 weeks, like you said, they go, oh, it's going down. I don't know what's going to do. So they just exit, and then they see it go back up again. So it's a fine balance, but you do have to have rules around it. So
I agree.
Right?
So
but
Leon,
thanks for the call anyway.
Thank you. Yeah, thank you for the call, and make sure you've read Dale's book by Friday.
And if you want to call just like Leon, give us a call, 92909988. This is the last calling we're going to have for this year. Actually, we won't be able to have calls for the next couple of weeks.
You didn't tell me that was going to happen.
No, well, okay.
I like to speak to people other than you on the show.
Well, so do I. I don't like speaking to myself either. Right. Boring conversation when I talk to myself.
Shall we continue?
I argue with myself. Well, let's continue. Anyway, well, before we get into our next email, if you are enjoying watching our show, then hit that like button now. Our next email is from Mandeep, who says, hi, Dale and Janine. Mandeep here. Been watching the show from the past couple of months, and thankful I found you guys just when started thinking of investing. I want to invest for the long term, thinking of maybe 2 to 3 or 5 years. I made a list of 5 companies, FMG, BHP, ANZ, ASX and AGL, after seeing the videos and you guys discussing about the companies. Wanted to know what you guys think about the selection. I am finally settled and ready to get into the books. I have ordered the first one recently. Love your work. Regards, Mandeep. Thank you, Mandeep, for buying the books.
And I just thought how fantastic. I mean, he's been following things, doing his research by observing.
Yep.
And now he's going to be learning a bit more, something a bit more concrete behind what your observations may be. and then see how those stocks go and where they may trigger their entries down the track. So really good stock choices, I thought.
Yep, really good stock choices. Not just okay stock choices,
Well,
really
they
good.
came from our stock list, I think.
Oh, good, I suppose. Yeah,
Some of our
you
shows.
gave him to Mandeep, and he's taking credit for him now. So okay.
So he's going to now pick the right time to buy, and that's the most challenging part of it all, Mandeep.
I would stretch it out, Mandeep, to having more like 8 to 12 stocks in your portfolio, not 5. Part of the reason is because of the risk you take, and I'll explain it in this simple way. If you put all your money in one stock, that's 100% of your money's in one stock is risk, 100% risk. If you divide that into 2 stocks, now your risk on each stock is 50%. If you divide it to 5 stocks, it's 20%. So it's still fairly high risk if you're a beginner. If you're a trader, like an experienced trader, 5 stocks is okay.
And you're trading short term.
And you're trading short term. You'll learn this in the books that you've ordered.
Yeah.
So if you go to sort of 12 stocks, that means you've got about 16%. 12%.
Yeah.
So you've got 8% in each position size, which is a hell of a lot better than 20% in each
Yes.
position size. So if they do go against you a little bit, you're not likely to
You're
panic.
not risking as much.
And you'll sleep at night, so you're not risking as much. So new people always go out to 12 stocks if you're more of a trader, and I'm meaning an experienced trader, not just can I say a weekend trader? Is that being rude to people?
What do you mean by a weekend trader?
Well, just people that sort of think they trade, but they just have a bit of a play. They're not necessarily highly educated, and you know, like our students are, and they really treat it like a job, if that makes sense, or a vocation. It's more of, I'll play a few stocks, that sort of stuff. Those
Right.
sorts of people. You still should be going for at least 8, at least. So
I agree with
any
you.
more you want to talk about?
No, that's it for now.
Okay.
He can get it all in the book.
He can get it all in the book, and more.
Well, our next email is from Andrew. Hello, Dale and Janine. I've recently entered RMS, Ramelius Resources, at 80 cents, mainly on fundamental analysis, but it also appears to have broken a short-term downtrend. Where do you guys see it going in the medium to long term? Cheers, Andrew. Well, there you go. We've got an interesting one there, and we've got it on the screen right now.
It is on the screen. What do you reckon?
So he said 80 cents, if I've got that right, where he's purchased, but I'm not really sure about how he might have bought it. I don't know if there's a trend line down there, but it's right. He's trying to pick it off the bottom. The risk is with doing that right now, especially at one of these types of stocks, is that they can always turn back. And one of the strongest levels for the stock, based on history, is somewhere around where its low is, which is good from the point of view of support. But do you think that the stock could fall to 40 to 50 cents? Is that possible?
If you're looking here, you've seen 1, 2, 3 weeks up, and then the last sort of 3 weeks it hasn't sort of gone anywhere.
It hasn't even really tested that bottom properly.
It
yet.
hasn't really, but then you look at, from that high to that low, it's nearly 15% in 1 week, closed down 13%.
And it's indecision, isn't it? One
It's
week it's
real
up, next
indecision.
week it's down, now it's up again, now it's in the middle.
Let me get rid of this first one so we can see the second one. Delete. There you go. So then it went up 14% the next week, and then it's down the week after. So, yeah, I don't know. I think it was a bit too early. It really hasn't done enough for me to say it's definitely going up. And he might have bought it on fundamentals or something else, but I'd want to see a little bit more than that before I bought it.
Yeah, I guess volume's starting to smooth out. It's sort of gone down a bit, which is often what happens with these sideways moves, but you really need to see that rise if the stock does move out of this.
It's gone up, 30% in the last few weeks, but I think that's where a lot of people would start to buy these sorts of stocks. They see them take off.
Stocks can easily
and
do
then they
30% off
jump
a
in.
bottom, and that's not even the bottom.
Yeah, correct.
Especially volatile ones like this.
Anything else you want to say on RMS?
Nope, that's it.
Okay, well, our next email is from William. And William says, hello, Dale and Janine. What are your thoughts on Scentre Group as a buy? I think it could do well in 2023 if it can get above strong resistance at $3. Thank you for your awesome show and banter. Cheers, William. I think he's talking about you.
All right, very cheeky there. All right, now looking at the chart, you can see that the $3 level is where it's really been tracking a lot of the time. So it's really struggled to get through that, even though we did see it break through that late 2021. Most of the time it's been hovering below that level. So we really need to see this stock move up above that at this point. So he's picked a good level, I would say.
He has picked a good level, and I think, you're right. But, it's not unusual for it to go sideways. Look, it does all through there for a couple of years. So it's one of those stocks that does that. But I don't mind I don't mind where he's talking about. If he gets through there, I think it will go off a bit more.
I mean, if the whole market moves up, which we're expecting that to happen eventually, then it should.
It is interesting how
Move up.
people think a recession means the market's going to struggle.
That's right.
It's really interesting, isn't it?
Isn't it?
You know, I wrote about that. I think this week for my market wrap that I did yesterday, I wrote about it, and people thinking, you know, a recession, you know, the stock market's going to go the other way. And I love that kind of thinking because it leaves plenty of opportunity for the rest of us to make a lot of money while everybody's sitting out of the market.
Fantastic. All right, it looks like we have another caller on the line. Welcome to the show. You have Dale and Janine here. Who have I got on the line, please?
This is Doreen. I did email you, and you did answer one of my questions beforehand.
Is it Lorraine?
That's it, yeah.
Oh, great. Hello, how are you?
I'm good, thank you.
That's good to hear.
Yeah, you did answer one of my questions before about ASX and where to find data.
Okay.
And thank you for that.
That's a pleasure.
I'm just wondering, Origin Energy, and I think you might have covered this last week or the week before. They got an offer, or if you want to call it non-binding offer, at $9, and the share price went quite high on that day. I know Dale says that you should sort of wait until the stock gives you a signal to get out, but I think you also said that should you sit and wait around until that offer's taken up or not, and when to get out?
I think your question is a really good one because there may be a lot of people out there watching who have got Origin Energy or even people who are potentially trying to jump in. So thanks very much for that. And we'll just have a bit of a chat about that for you and have a bit of a look at the chart as well briefly. But we did cover Origin, Dale.
We did.
Yeah. Just recently, as Lorraine said.
We did.
And it's really tough, isn't it, sometimes? On the one hand, it's great that the shares have gone up.
Yep.
But it can be tough for investors to know what to do when there's a takeover announcement. But you can make it really simple on the one hand. However, I just want to, first of all, see, I had him thinking I was going to let him speak then. But I haven't finished yet. So with Origin, I did a podcast on Origin. Now, what has been happening in the industry, right, with Origin and AGL? They've been really under the microscope, and with any talk of government regulation, share prices will fall. So we've seen stocks like Origin and AGL that have been held back. So in my opinion, first of all, it's not really a 40% gain in the share price because the stock had been down because of what was going on, but its true trajectory was long-term up, long-term bullish based on our analysis. Yep. So my thinking is that the premium is really only about 14% or something like that, I think I worked out, based on where this stock's likely to be trading. And not only that, $9 would be a realistic price for the stock to be trading at within 12 months anyway, based on that. 12 to 18 months, it would have been there anyway. Now, the downside for shareholders who just take the money and run, because everyone thinks short term, and that's what really annoys me with our companies that get taken over, is that you lose that future potential to get any more out of this stock. It's gone. And I think that's happening too often of good stocks on our stock market that have the potential to be really good, not just for individual investors, but for people's super.
Okay, so what you're saying to me is boards and people like that don't have a long-term vision, they have short-term visions.
Well, it seems like that to us because when we're looking at the chart, we look at long-term and we find so many times it doesn't matter what happens, the stocks trade to those sort of levels. We might not get the timing of when it happens exactly right because there can be a number of dates when a stock can hit certain price levels, but we know the direction, and that's the difference. So
what should a shareholder do of Origin right now?
Well, it's hard for shareholders because, you know, they've got the money, it's the bird in the hand scenario, isn't it? So I think two things, it's not trading at $9 yet, so if the takeover gets approved, it'll jump $1.
Yep.
So if you want to take your money and you feel that that's the case, there's nothing wrong with taking a profit, I think.
Okay.
But a lot of shareholders, and we would probably, if we were holding this stock, we'd be waiting to see what the final decision was on the stock because it's trading nowhere near its offer price.
Okay, so it's well said by me. Cool. All right. Well, Janine, I think it's time to get into our topic for tonight. Now, before we do, I think it's time for everyone to give the show a really big thumbs up to show the team that they like and appreciate all the work that goes into producing this show each and every week. So please click the like button now. It's just down below the video here. So just do that. Also subscribe to the channel if you haven't done that already. We also have an important announcement. So now is the time you need to listen really, really carefully. Now, the other week, I mentioned that we launched Talking Wealth TV, and we've been doing podcasts for so many years. So now we have Talking Wealth TV. Now, there are well over 200 interviews that Janine and I have done. Now, if you do want to learn about how to build wealth, invest, trade the stocks, start a business, manage your superannuation, invest in property, both commercial and residential, find out what's happening in the economy or interest rates, and so much more, then Talking Wealth makes learning this easy for you with all of this and more at your fingertips. Now, we talk to trusted experts from around the world and ask them the questions that you want answers to. So rather than take potluck on YouTube, you now have a place to get help from experts that you know you can trust as we've checked them out for you. So check it out now by going to talkingwealth.com. So that's talkingwealth.com. Oh, and by the way, if you do register, you can enter for the chance to win $50,000. Wouldn't that make a nice Christmas? So check out talkingwealth.com. Now's the time for tonight's topic, Janine.
Thank you for that. Actually, that's really exciting news. Actually, Dale, before we do, the evening would not be complete without a short interlude.
Do I play music? They say you never ask your question you may not like the answer to, but here goes, Janine. What do you got in mind?
Yeah. Well, it's Janine's joke time, or did you forget?
I didn't forget, but this is the stock market show, Janine, not Dale and Janine's comedy hour. So I'd rather forget the joke telling.
Well, I'm not going to let you, and besides, there are lovely people who have encouraged me to persist, so you wouldn't want them to be let down now, would you?
You sure they said persist? God, they say practice makes perfect, Janine, but like a kid with their first drum set, I do wish you'd practice somewhere else. So if we must, just go for it.
Are you giving me permission to make some noise? That's dangerous.
Just go for it.
Thanks, Dale. When I was young, I thought the rich people owned Bose stereos and the rest of us owned Sony. But I later found out that they were just stereotypes.
I don't know what to say to that.
You didn't get it, did you?
I did get it.
It just went over your head and through your ears and out the other side.
It hit me like I saw the punchline come before you even got there. Well done. Well done. I do hope everyone is giving you the encouragement like that one. So all those people that gave Janine encouragement, I hope you did like it. Now back to something sensible, Janine. As Janine mentioned earlier in the show tonight, is all about dividends. Perhaps you're looking forward to early 2023 in anticipation of the next round of big dividends being announced. So to assist you, we plan to run through some great dividend stocks and share our thoughts on whether now is the best time to buy them.
Dale, this is exciting. If you agree and like this topic and would like more shows about dividends, and I'm talking to Dale, I'm talking to you now.
Dividend stocks, yeah?
Yeah, dividend stocks. It's time to give the show a big thumbs up to show the team that you like and appreciate all the work that we put into the show each week. So thank you for your support. Now, we know that many investors will buy just about anything for a big dividend, and we want them to avoid the biggest risks.
Okay. Janine, did you know that the first quarter of each year you are more likely to hear investors say, "Show me the money"?
Dale, seriously? Besides Tom Cruise, you're the only person I've ever heard say that phrase so well.
Well, you're
Are you
wrong, because
referring
Tom
to
Cruise
yourself?
never even said it. It was Cuba Gooding Jr., whatever his name is. So you got all that wrong. But anyway, thank you, Janine. Now, there are 3 points investors must understand before they invest for income. So how about we take a look at the first one, Janine? All right, number one is about never chasing stocks just for dividends. Now, juicy dividends will mean some investors make the mistake of falling in love with the stocks paying high dividends. But what's the point in holding on for a 4% or full 4% when the price could fall by 30 to 40%? Logically, the answer is very little.
Number 2 is always be open to other methods for generating an income from the stock market. Once you're educated, you can do it. After all, should an income be paid more often than a couple of times a year? And wouldn't you prefer a more regular way of generating an income?
Okay.
All right, let's have a look at the next one.
Yes, of course. I think most investors would say the same, wouldn't they? Now, savvy investors do not follow the herd, and they are never desperate for a dividend, as buying stocks to get a dividend can be a very risky business. Now, risky business, you know?
We're talking about Tom Cruise.
I know. Anyway, you're
Isn't
correct.
that appropriate?
Well, you are correct, Janine. We are talking about, well, you were talking
Hang on,
about
can
Tom
I record
Cruise.
that? You said I'm correct.
You are correct. You're talking about Tom
Please
Cruise.
make
I'm
sure
not
you
sure.
record that.
Why are we talking about Tom Cruise? Can we get back onto what the show's all about here, okay? So more risky than many investors realise, but most investors are focused on what they can make and give little thought to what they might lose and how to manage their risk properly. So it's important that we share our experience, as we know that dividends are above historical market averages. And when this occurs, they are unlikely to remain high for very long.
Now, you know, Dale, it is tricky for investors because if you take the dividend and factor in the franking, that's a good return, depending on your tax position. So we understand why the herd gets excited. But as conditions are far from normal right now, this is when investors can get caught.
Okay, so our regular viewers know, as they watch the show, we do our best each and every week to share what's important. And if you are new to the show, you might be super excited about what we are going to share with you. So just keep watching.
Dale, when it comes to selecting the best dividend stocks to buy in 2023, everyone will need to adjust their thinking, as it's no longer wise to just buy in the hope of receiving the highest dividend.
Okay, you're spot on, Janine, as always.
Well, we believe that talk of a recession has already been largely factored into stock prices. However, currently, the fundamentals for some stocks appear distorted. Dividend yields are high and PE ratios on some stocks are incredibly low, giving investors the impression that they are cheap.
Okay. Well, we know the truth is often quite different, don't we?
That's right.
Now, point number 3 is what?
Is if you are holding or chasing stock for a high dividend, remember a higher dividend is paid for a reason. And this could be to retain shareholders during a share price decline or when conditions may change.
Okay, now to help, you get some understanding of what can I'm a bit tired tonight, aren't I? So, to get some understanding of what can occur, we are going to share some examples of stocks paying high dividends tonight and where we believe they are headed. We'll also share ones that we like and those we believe you should be wary of. Now, Janine, I know you're looking forward to this part as you love the charts, as are our viewers, so let's get into the charts.
Let's do that now. So on the screen, first of all, I've got a watch list.
Okay.
So these are some of the biggest
Where's
dividends.
the buy list if that's a watch list?
Yeah. So these are some of the biggest dividends right now being quoted, dividend yields anyway. Okay.
Yep.
So we're talking in the order, I did a scan of the top 200 and I picked out anything over 6%. So I've got a big list here. If I scroll down quickly, you can just see there.
That's a big list.
Yes. And most of the ones at the top are close to sort of 8 to 10%, you'll see there. So what we're looking at here is Magellan Financial Group is at 18.5%. Do you think they're going to pay that? That's a question. Fortescue Metals at 10.87. Then we've got Coronado Global Resources 10.06. Rio Tinto 9.22. Fletcher Building 9.08. Just have a look at the PE ratios of these stocks, particularly the miners we've talked about before are so low. So I guess what I would suggest to people is to pick some of the stocks, if they're wanting high dividends, to also watch those PE ratios, because any PE that's artificially low could be cause for a concern.
Well, a high PE, a high dividend, it could be a whole big sign of a stock falling away. So can we have a look at the charts?
Yes, we can. Normally a low PE is a good thing.
I normally don't have to tell you to look at the charts. Can we look at the charts? Okay.
Yeah, so this is Coronado Global Resources. It's been pushing higher, but at the moment it's just consolidating. Now, if we quickly go back and have a look at Coronado Global, we can see there its PE ratio is absurd 2.6 and its dividends 10. So there's something really completely out of whack here with this stock right now.
Yep.
It's trading well below its all-time high at the moment. It's had a big correction recently and it's just trying to get back up. But I'd say if it gets a bit of momentum behind it and heads back above here, it could be rising again.
Okay.
But at the same time, people shouldn't be buying a stock just for the dividend. It's got to be the technical analysis is matching
and the fundamentals to support it.
what you're wanting to do. Now, short-term trading, not so much, the fundamentals are not as important.
Correct, yep.
It's more about show me the money, where's the money flowing. So I think that's important. But I just thought this one was an interesting one because I've never had this one on the show before.
Yep.
And it's come up.
All right.
FMG's one that we like. So FMG's a great stock, good company. We're still expecting some downside on it, which is really, it's the recent moves in the last week or so have really got us perplexed. But look at this massive gap.
Huge.
And there's another one down here. Now, do you know how rare it is that these stocks don't fill gaps? That they fill gaps on the weekly chart? 9 times out of 10, or maybe higher, they will fill those gaps.
Yep.
So, that's what we're looking at the moment. We've said for a while that there could be a fall down here. I wonder what the dividend yield would look like if they continue to fall, though. Surely the miners have got to turn around and start to say, well, we're not paying out at that level.
Well, yeah, because there's obviously a reason why it's falling.
Because often when stocks peak, that's when the miners will, historically might up their dividends to increase those yields. And then once they're falling away, they start to just, release it.
Okay. So what's the next stock?
So that's FMG.
Yeah.
Magellan Financial Group's an interesting one.
Which is paying like 18% or something.
Yeah, 18.5% it was.
You can tell why. Look at it, how far has it fallen?
Yeah, so this is where you might look at stocks, and if you're just looking for a high dividend, it's really high risk.
This is
because of this scenario that you're seeing. This is a really good example of where buyer beware, because you could be trying to pick, I'm sure a lot of people were picking income, this stock is a good income stock, and it just kept falling away. They're probably thinking that it's not likely to fall much further, and it fell 50%. It fell from $20 to $10 over a space of a number of months. So it still could fall, but it looks like it's levelling out at the moment. So I don't know whether it's going to turn around at this point just yet. We need to at least to start moving back up above the high of about 3 weeks ago.
Yeah, well, look at that. That's over 40%. So what you said, like you said earlier, what's the use of getting 4% when you're going to lose 50%?
And the dividend's uncertain.
And the dividend's uncertain.
You don't know what
unlikely to keep paying that sort of level.
That's right.
Cool. What's the next stock? I'm excited.
Okay, so that's FMG. So MFG. So there's a lot of interesting stocks to look at as we saw on the watch list. I was thinking, do we give people the watch list if they subscribe to the show tonight?
Gee whiz. How do they do that?
Well, they'd have to subscribe to the show and then email, do a screenshot to show that they've subscribed to the show.
Why are we talking about this now?
And then they can send
me before the show.
That's why I wanted to do it on the show, because then you can't say no.
Yeah, I can say no. No! Next stock.
All right.
Maybe next time we can sort it out. I promise I'm
so
not talking
I hope I have all these people snapshotting there how they subscribe.
Okay?
There you go. All right, so Rio Tinto is another one. So it's practically a mirror image, isn't it, of FMG?
Yeah.
It looks exactly the same. So this is where our market's quite contrived right now. They're not trading as individuals. It's being traded as a group. So what's the great thing about Rio is it's come up to this really important level that happened in July 2019 at around $106.80. And given the strength of the move up, if it remains up and holds up, then that's great. But there's always this concern. That gap's filled, which is great, unlike FMG. This one still hasn't filled. There is a possibility that Rio could recover, but it's still uncertain right now, given that really important level there. So let's just keep watching this space. But like the other stocks, the dividends could be adjusted at some point. It's just uncertain.
Isn't it surprising to see stocks like FMG and Rio paying high dividends?
These stocks would pay less than, it was always less than 4%, and it might be, 2-3% historically. But But you can actually find out what the historical dividend yields are. And I did have one of the guys from Optima did give me a graph to show what that looks like. But
Because I would never think to buy Rio or Fortescue for a dividend ever.
no, but now,
Or BHP.
now it's a different story, isn't it?
Yeah.
But capital first, dividend second, like you say. Fletcher Building was an interesting one. It's actually retraced significantly in recent times, but it's possible that given the strength of this level, look at this here that it's come back to. We're not certain it's stopped falling yet, given the degree of the fall that we've seen more recently. But if that's the low,
That is, yeah.
there's potential there. But you can see that there's a lot of resistance around this level, and you talk about this in the Trading Mentor course. I can remember seeing a graph where you showed a big picture perspective and how the stock bounced around these sorts of levels. It could do a similar sort of thing and hit that level
It's
again.
looking nice, isn't it?
But it's looking more interesting than it was, obviously, when it was falling.
Yeah, I think it's. I mean, that's the whole idea. Is these stocks that look crappy now. This is the difference between a trader and somebody who's not a trader. The good traders look at stocks that look like they're crappy stocks, but no, they're not crappy.
But a trader's not likely to hang in for a dividend anyway, because they know if a stock goes ex-dividend, it's going to fall by at least the dividend when it does.
Yeah.
And so why would they want to be in there for that anyway? So most of the time they'll be in there for the capital growth and out before that dividend comes along. So
No, to me a dividend's like, I get surprised when I get a dividend payment. I go, oh, I got a dividend payment.
Well, right now, banks are even paying really good dividends. I mean, most banks are paying somewhere around 5-6%. The yield's around 5-6%. And then they're fully franked, 100% on top of that.
Yeah.
And you've got less risk than trying to go for some of these more volatile shares. But it depends on your propensity for risk, doesn't it?
Well, it does, and it's also about you just don't. When you're constructing a portfolio, it's not just about dividend. It's about what's the portfolio, what's the goal of the portfolio, how are you putting those stocks into that portfolio.
Well, a lot of retirees, they want that income, so they look at different products to try to get that income. But we know that people who get into understanding stocks in the market understand that they can actually trade in and out of stocks to get the income, and they're not afraid of doing that, and they're not worried about the capital gain side of it.
That's what we teach, and you can make so much more income doing it that way anyway.
Yeah.
But anyway,
it's also really interesting to look and do studies on when stocks pay dividend and understand that. So, but look, that's all we've got for tonight.
I want to do a seminar on talking wealth for that with you and me.
On dividends?
On creating income streams.
Yeah, I know.
So we're going to do that on Talking Wealth soon, very soon. Okay, that's it for our topic tonight. Now, before we get into our next email, given you're at this point in the show and you're still watching this crazy dude, it means that you like what we're doing. So if you like what we're doing, make sure you hit that like button right now and also subscribe to the channel. Now, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now is the time to get dialing. The number you need to call is 039290 9988. That's 03 for Melbourne, 92909988. So get dialing now.
While you call us, we will get into answering the next question, so call now. Now we have a question from Steve. Hi, Dale and Janine. Long-time listener, first-time emailer. Well done. Could you please look at RNU for the long term? Bought in at 25 cents in May. Regards, Steve. Thank you very much, Steve. We look forward to hearing from you in future. All right, let's have a look at that, shall we?
Well, he bought in at 25 cents in May. Let me just turn that off.
Yep.
So he bought somewhere around here around May. So therefore he's had the big dip. He's gone on the roller coaster ride at the theme park. And now he's actually making money. So he's actually up a little bit. So that's probably why he's asking about, protecting his profit. So he's up a fair whack, or actually no.
Oh, it's actually traded down this week, hasn't it? But he's still got a decent profit sitting there at the moment. Look, this is a real conundrum, isn't it? Because it's a volatile stock. The liquidity would be a question mark. Look at the liquidity of it.
Yeah.
Are you having fun there?
I'll let go of the mouse. You're in charge. Okay. I get told off for playing with mice.
Yeah, okay. So right now, it's actually, if you guys can see that out there, I'm just going to expand the chart up a bit. It's actually opened right up here at 34 cents, and it's closed all the way down there at 29 cents, which is a big percentage for a little stock that's trading at around the 30 cent mark. The concern right now is whether it would find support here and then turn around and go back up. I've seen plenty of stocks when they get near their highs, they struggle a little bit, but it could push through. You just don't know. It's too early, isn't it?
But this is a real, and we're only talking 2 days in. That's a weekly chart. This is Monday, Tuesday. So I understand if you sent the email in today.
I mean, if you bought that stock, would you be expecting that could come down for a couple of weeks?
Absolutely, I would. And that's the thing. I don't think he bought at the right time. His timing was out on his entry, but right now...
But it's going up and the trend's
It is going
up.
up, but I wouldn't be too worried about it. But he bought it on the way down.
Yeah.
So to me, I think, look, I'm not worried about it. I think...
But look, I mean, you know, how should investors think about buying these sorts of stocks? Should it be short term?
No.
Why not?
Because these sorts of stocks, you need to look at the fundamental value underneath that. And if because he's talking about longer term, isn't he?
Yep.
So therefore, you know, that thing's been going sideways for a while, hasn't it?
When you say long term, I mean, it's not, it's only really had volume over the past couple of years.
I know. But the thing is, too many people trade short term who don't have the knowledge and skills to do so. And therefore they get stuck in stocks that are going sideways or down.
I don't know. For me, I think this is more short term.
This is a trader's stock, not an investing stock.
You know, 2 or 3 months at max of being in this thing.
But that's not an investor stock, it's a trading stock.
That's right.
It's a different thing. So, okay, so let's move on now. We've got a question or an email from Peter who says, "Hi Dale and Janine, thank you for providing such an educational and informative show for us retail investors. I'm looking at DSK. I'm not in it, just watching at the moment. With Christmas around the corner, I would think this would do well. I'm thinking if it gets past 40 to 245, it could go for a run. Looks as if the chart is getting some higher lows. Would love your thoughts. Thanks, Peter." So, DSK, Christmas around the corner.
Yeah, okay. Dusk, a lot of people know dusk, especially especially the ladies out there.
Occasionally.
Are you one of those metrosexual, you know?
Well, I go in there with my wife and buy candles with her and smell them and stuff.
Do you?
Yeah.
Okay.
Why
There you go.
not?
You've just learned something about
What's wrong
Dale
with
that you
that?
didn't know.
What's wrong with that? I'm showing my feminine side.
Okay, lovely.
Okay. I don't show it too much though. DSK.
All right. Okay, DSK 245.
Yep.
Yep. Some resistance around there, and I think the person who's what was the person's name?
Peter.
Peter. I think Peter's probably got it spot on there.
Yeah.
It's got the potential if it starts moving up to head towards that $3 mark. So, you know, I think it's just about waiting and seeing if it can get a move on.
Yeah. Christmas. Going to have much of an effect.
Well, look, I mean, November. The thing with Christmas is it's all about November. So if the November sales do well, then the market thinks, great, we're going to go for this. So I would just be watching to see how dusk perform through this current period, or all retail stocks for that matter.
So you wouldn't buy it necessarily because Christmas is coming?
I would never buy a stock just because Christmas is coming.
Okay, because you don't like Christmas at all. If you do want to give us a call, remember 92909988. Pick up your phone now and get dialing.
Who says I don't like Christmas? I put coloured clothes on.
Red and green, that's what you want me to wear.
Put fluffy hats on.
Okay.
Our next email is from Donna. "Hi Janine and Dale, I've read Dale's book and watched your channel. I appreciate your common sense and simple explanations of investing, and my question is, what is your opinion on takeovers? I'm interested in the BHP takeover of Oz Minerals and the possible takeover of Origin Energy by Brookfield Asset Management. I already hold BHP, so does that mean I will get Oz Minerals shares? Can I buy Oz Minerals? I'm thinking which can be dangerous she's thinking, so that's dangerous, is it?
No,
that's cute.
she's thinking of buying Oz Minerals. She's thinking that might be dangerous, not that she's thinking is dangerous.
Oh, I thought she was being cute because she's put an exclamation mark.
She's being very serious here.
Is she? Perhaps
Help
you
her
ring
out.
into the show and help me out here.
Help her out.
Or when Origin is acquired, my motivation is renewable energy, medium to long-term investor, researching, and yes, I will apply your rules. I've just got investing fatigue at the moment. Thanks so much, Donna.
Okay, takeovers. So she's talking about takeovers. So she talked about BHP. She's also talked about Origin and stuff like that. Does she need to buy Origin?
I don't think anyone needs to buy any stock that's currently under takeover.
Correct.
Some people have it as a strategy to try to get that little bit of arbitrage The difference between whatever the market's saying that it's worth at the moment, which the market said around $8, and I could have told them all that, but the market's not willing to value it at 9 yet because it doesn't know whether the takeover is going to be blocked. That's basically.
But she already owns BHP. That's what she said.
That she owns BHP, but she's talking about Oz Minerals, the takeover of Oz, because BHP have come back with another takeover bid for Oz. You see. So, I mean, I don't know what the ins and outs of that is and whether Oz Minerals shares get given. So I really don't understand that yet at this stage. I haven't looked at the full detail.
It's about going to the ASX website and looking at the announcements, because if you're a shareholder of the company doing the takeover or the company being taken over, you would get a release. If you own those shares in that company, they'll send you an announcement about what that is. And so that'll tell you whether you get shares or you don't get shares, and how or whether you get cash or whatever happens in that whole thing. So first place you always do is go to the ASX website, go into the announcements and just type in the stock code or the name of the stock that you own, and it'll tell you all the details of the takeover offer regardless.
Yeah, and the other thing is that you should be, like Dale said, you should be receiving information on that as well from the share registry. So you can always contact the share registry as well and get that information if you haven't received it.
Like Computershare or
one of the other ones.
Yeah, the other one. But anyway, right now I said takeovers are always an interesting time, aren't they?
Very interesting.
So just be careful, just read up on it and have a good look at it. But our next question, or our next email question, is from Lloyd, who says, "Hi Dale and Janine, I emailed in a couple of weeks ago about TNE. I'm still watching the stock, waiting for a pullback as it approaches its all-time high. The stock in the past can run up for 6 to 9 weeks only to pull back. So I'm waiting and watching. I like the stock and think it might do well in the future. Looking to trade medium term. Merry Christmas to all the Wealth Within team and keep up the excellent jokes, Janine. Regards, Lloyd."
There you go, another one. Thanks, Lloyd. Thank you very much for that support.
Like, I was so excited about Lloyd's email to the bottom.
Okay.
TNE.
All right,
you better
let's have a
answer
look at
because he
it.
loves you.
All right. We can see that there's a breakout, like he's saying, and the stock's holding up. Look at I love his observation, the fact that he's identified the fact that this stock does go up for X number of weeks. Look at that move up there, 30%. And I guess it was a real break up here, wasn't it? Sort of went up another 30% there.
But it's due for a pullback, isn't it?
And then 60% there. So it is due for a bit of a pullback, but it might shoot through as well. You just don't know. Let's have a look at the shorter term. So it looks okay. It looks like it's got some support underneath it as it's risen up, which is really good. But you'd expect a couple of days back, wouldn't you?
You might. Well, I'd expect a week or two back, but you might see like it push through, because obviously there'd be people sitting above this high trying to buy once it's broken through the all-time high. So you might see it push through only to come back again. So you might see brokers in the big end account push it through. I just like the look of it, the support that's down here underneath it. But it looks all right. I like it. I think his strategy is really good. I think, wait for a couple of weeks to come down and see what happens and then go from there. I don't mind his strategy. I think it's good. How's that one?
Okay, great, Lloyd.
Okay, even though we asked for more jokes from you, I think it's okay. Cool. Our next email is from Nigel, who says, "Hello, Janine and Dale. Just finished a short course and started to look at the market, and I have just bought into Wesfarmers at 49.28 this week, and I set my stop loss at 41.87. Can you have a look at this, and would love to hear your thoughts. Regards, Nigel." Do we actually have to answer that?
Why is that?
I'm just asking.
Why the question? There's got to be a reason from you. Like, what is it?
I'm just asking.
You're asking?
You can answer it.
Oh, my goodness. All right.
I'm just playing with you.
All right, Nigel. I would love to answer this question because I really like this stock. So
I do too.
Let's just have a look at this now. I'm just going to put this blue on it. So he's bought here.
Yeah.
And he's got a stop loss, it looks like, underneath that. So let's just have a look to see what he's got. So it's around the 15% mark, which is lovely.
Yep.
So I think, at the moment it looks nice. There's nothing to say about it, really. It just looks like it's in an uptrend. It's probably crossed over a trend line a while ago. I just think it looks good.
I think I would ask, Nigel, he can't answer this, but I would just say, how does he feel about this trade? Because often when people start our courses, they do so because they lack a lot of confidence, or they lack you know, they jump out too early, they jump in too early, you know, they hit and miss where they're trading, and
So
their
you're
confidence
asking
is
whether
low.
his confidence has changed
So yeah,
because he now has
so
the
to me it's about
strategy
a soft
behind him.
question of saying, well, you know, how does he feel about this? You know, if he's looking at this trade and now he's applied some analysis to it, because there's obviously he's applied a lot more than what we've just talked about, because there's a lot more he would have learned. But just seeing how he feels about it and if he feels more confident in this trade.
That's a really good
And to me,
question.
that's the level, and not necessarily what you and me think, because Nigel's the one that's got to manage it.
Yeah, well, I mean, he's got a stop loss in place. He's had some rules to buy, and he's kept it simple by the look of it.
But that's priceless, that sort of thinking, that sleep factor, that I know what I'm doing here, I know I'm more confident in entry, I know I'm going to how I'm going to manage it, I know what's going to happen, you know, if it does go down, what I'm going to do, and that certainty that what he's learned, that's the big stuff. That's not just how to buy and how to sell. That's not necessarily the big thing. It's about giving you that confidence to be the trader, not just think you might be doing it okay. And that's what a lot of people do. They just think and they guess a lot, which we see a lot on this show. But I think he's done well.
You just blew me away then.
Did I?
That you're really thinking about him.
I know, because he's a nice bloke. He's probably good looking like me too.
Okay.
Can we move on to the next one?
We shall. We have an email from SS. Hi, any thoughts on NCM for a medium term? Thanks, SS. All right, let's get over recently.
Yeah.
We looked at a number of gold stocks.
Yep. So this
Because
Newcrest,
quite a few gold stocks have gone up. Newcrest has really only just sort of jumped off that bottom. It looks quite good, but it's a highly volatile share, even though it's the top 20 share.
It is.
The way that this stock moves, it behaves more like a sort of a liquid share, doesn't it?
Oh, it does. I mean, look at the huge moves over a few months. If you're talking about from down there to up there, look at that move. That's only 50. Oh, actually, that moved on me. Was I'm having a good day today, aren't I? Let me put our lock on, and we go. Look at that. Look at the move. 80-something% over a period of 1, 2, 3, 4 months. Like that's massive move. But then it's fallen out of bed.
That's right.
So how do you buy and hold that?
Well, it depends. I mean, you've got to have a strategy first of all, and you've got to have back tested to understand what to do.
Is that a stock for investors?
Even though it's in top 20, look, I think it's okay if you've got a decent set of rules on it to trade it.
If you've got a decent set of rules.
But, it's not for the faint-hearted, that's for sure.
Okay, so what are your thoughts on it right now? Yes or no?
Well, I would say, look, for me it's a little bit too early, but I do like it because I think it's pushed up, and it's pushed up above an important level, but there's still a little bit more resistance there. I just $20 mark. I just see.
Okay, so you're excited, but you're not that excited.
I'm excited about the gold stocks rising.
So it's about like going to watch your team play against Collingwood. You're excited, but not that excited.
I just look at that and think, great. Hopefully we see another run like that from 2018, but we don't know whether that's the start of it yet. What do you think? You just seem to be holding your cards to your chest there.
Well, look, I'm not convinced on this one yet. I'm really not convinced on it. It looks nice, but I'm not convinced on it.
Okay.
That's all I'm saying. Is there's some stocks that we've seen tonight I get excited about, like really excited about. But that's the thing I was saying a little bit earlier, is often what people bring up is not necessarily what's excitable to us.
So let me understand this for a minute. Do you prefer stocks that are already in a trend up, or do you prefer the ones that are just coming off the bottoms?
Look, I know I prefer stocks that are already trending up because it's so much easier to make money. So many people try to. I was going to say
Get in early?
Well, get in too early, and they're trying to, like, if a stock's floating around $3 for say, and that's one of their lowest prices, they try and get in at $3. Or I'd rather buy at $5 if it's better. And I'd rather give away 20, 30, 40, 50%.
You mean
off
if
the
it's
bottom.
got more, you've got more confidence that it's likely to go up?
Yeah, it's like people make their job so hard because they try and they buy stocks like they try and go to the supermarket. They're trying to find bargains everywhere and trying to buy something as cheap as they possibly can, because that's ingrained in our thinking.
Yeah.
We walk around shopping centres all day long and you see percentages off here, 2 for 1s, all that stuff. You can't buy stocks that way. It's about, well, I want to make money, so I want to put my money into a stock at the best chance that it's going to be safe and then it's going to grow. And when it's already in a move, that's the best. That's the lowest risk time you can have, because one thing it's going up.
Yes.
when your stock's going down, you don't know it's going up. It's going down.
But there are other things, obviously, that you've got to put into that because there are some moves that are only going to last for 3, 4, maybe 6 months.
Yeah, but you don't have
before
to
they
pick
pull
them.
back. No, but you don't know because you don't have a crystal ball to know exactly what's going to appear on the right-hand side of the chart.
I do.
You do not. So it's about actually deciding when the risk is low enough, isn't it? That's really what you're saying.
Correct.
Yeah.
Yeah. Anything else you want to say?
No, that's it. I think
All right.
Newcrest's an interesting stock. Thank you so much, SS, for raising that one.
All right, well, that's our thoughts on Newcrest Mining. Now, Janine, you've been asking us questions, and each week we asked you for your thoughts, or Janine's asked you for your thoughts. Now, last week, Janine asked you what percentage of your total available capital that you intend to invest in the stock market is currently invested in stocks, and when do you believe you will start buying more? Now, Janine did like your response, but from Red Brick. Do you want to read out Red Brick?
Yes. So once again thanks once again for joining in. You said, back to the fuchsia, absolutely brilliant. I couldn't contain my laughter. I don't understand how Dale could keep such a straight face. Me neither. I love short-term trading, so my current capital investment level is at 100%, but I will start to reduce my exposure over the next week as the wonderful price rises in my trading stock list, which occurred in early November, are starting to wane, and I'm concerned with the direction of some of my chosen stocks are taking. And I've also just realised that it's coming up to another RBA rate rise decision, so I'll be careful with my position choices in coming weeks and see how the market reacts once the RBA make their decision known. I'm hoping that some buying opportunities might show up in the charts, but the market may have already factored a price rise in.
Well, I'm glad you like Janine's joke. God. And glad to hear you are sitting on some great profits. Thank you. Well done, Red Brick. Now, the RBA rate rises have had an impact. However, unless they surprise the market with a really big increase, I'd say any small incremental change has already been largely factored in. So for you, with short-term trading, it's really much more important to have good rules than it will be. If having good rules means it'll be irrelevant to you what the RBA does at any time. So I wouldn't even watch the RBA rates. I don't think it's relevant to you.
Yeah, that's a good point. Thank you so much to everyone who did comment last week. We do love reading your comments, so keep them coming. And this week's question is, if you go on holiday, do you leave all your trades open or sell at least part of your portfolio? If so, why? And if in the past you simply held, was there ever a time when you were worried about losing money while away?
Great question, Janine, and I'm sure you'll get some great responses, and hopefully nobody asks you for more jokes.
I hope so. Remember, if you are listening to us on a podcast, we do not want you to miss out, so you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app you're using. If you can share a link to our show with friends and family, we would be really grateful.
I want to remind everyone to head over to talkingwealth.com and check out Talking Wealth TV. And whilst you're there, you can enter for your chance to win $50,000. So go to the website, talkingwealth.com, talkingwealth.com.
Also, if you've enjoyed tonight's show, remember to hit that subscribe button.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call. We'd love to chat with you. Now, if you are not able to watch live, you can email your question ahead of the show. You can do this by sending your email to info@wealthwithin.com.au. And remember, you need to put Wealth Within Live in the subject line.
Are you all right there? You just took a deep breath.
I know. It's
Just want to make sure you got some oxygen. You don't pass out on.
Thanks, Janine.
We really
You
appreciate
won't give
your
me the kiss of
support
life?
to show yours by subscribing to our channel by hitting that subscribe button now. Well, that is it for tonight's show. We do hope